Welcome back to our attendees. Our next speaker, Mr. Alan Ainsworth, Head of Policy at Open Banking Implementation Entity, OBIE, speaking on today's topic, Open Banking in the UK. Over to you, Mr. Alan.
Thank you very much indeed. What I thought I'd do is just give you a bit of a hint as to why we believe that open banking in the UK has been successful. Because I'm very proud of what we've achieved so far, and I'll take you through some numbers and explain what I believe are the core building blocks of an open banking ecosystem. So I'll give you an idea of the numbers, how many customers that are using open banking in the UK, how many providers. I'll talk you through a little bit about definitions. I'm assuming many of you know what open banking is, but I'll explain what I think it is. And then I'll go through what I think those building blocks are and a little bit about the regulatory framework, because if you're looking to do open banking in an area where it isn't regulated yet, give you some hints as to what it is in the UK and in Europe more generally. So the numbers, and I'll give you a little bit of context on this. So in the UK, we have around 70 million people, around 40 million of those are adults that have access to digital banking. And that's our population that we're intending to go for. So we've got a very high level of digitally active people in the UK. A very significant percentage of people that are digitally active use online or mobile banking. So our population is all of those people that are currently using online banking in the UK. The essential prerequisite here is that the bank must share the information they share in their own direct online banking channel. So 4 million users is around 10% of that base. That's going up significantly. We were at 3 million roughly 8 months ago. So from quite a slow start as participants start to build their propositions, the momentum has risen and we're now at around 4 million users. 325 participants, that includes the banks that are showing their data using as part of the open banking ecosystem, and around 114 providers that are live with products in the market in the UK today. So I hope you'll accept that this is, in our mind, that is very significant success, and we're very much looking forward to seeing that 4 million number increase over the next few years. So what is it? Now, it's actually two things in the UK. It'll be different in different markets, and this is very much the same as in the EU as well. So as a data sharing application, it's a way to unlock that financial data currently held by banks. Now, many will be looking for more financial data than just that is owned by banks, but at the moment, open banking is limited to payment account data that is held by what we call account servicing payment services provider, but essentially any organization that runs a payment account. And it enables those TPPs, those third-party providers or fintechs, to offer customers apps that use that data. So it's freeing up that data and putting it directly into the hands of the consumer. What it also does is it enables payment initiation. So of course, in many countries, both in the EU and in the UK, we have account-to-account payments using, in the UK, faster payments, and in Europe using SEPA. And this is taking advantage of those rails and enabling people to use those rails to make payments directly to third parties. And at the moment, we're starting in the last few months, our tax authority in the UK is using open banking payments too. And you may say to me, well, what's the difference between a straightforward account-to-account payment using my mobile banking app and using open banking? The real difference is you can pay in the domain of HMRC in this case, or in the domain of the merchant. You don't have to leave that app and go into your banking app. What that does is it improves reconciliation. So whilst tax authorities may not have a significant percentage of unreconciled payments, those numbers are actually quite high. And one of the biggest problems of paying your tax is sometimes it goes into an account that isn't yours, and therefore you're in this endless debate with the tax authority of whether you paid or not. What the EU did in terms of the regulatory principle here is essentially a bargain whereby they said, you, the banks, must provide this access to regulated third parties, but the quid pro quo is those third parties must be regulated. So in the UK, we operate a regulatory framework for this. Essentially, in other markets, you may have a contractual framework for providing open banking, as is the case at the moment in the United States and in other markets, whereby the bank will have a contract with a third-party provider. In the UK, as in the EU, there is no need to have those contracts. So as I said, what are the basic principles of open banking in the UK? And I've got 5 building blocks here. And hopefully what I'll be able to say here a little bit is what's different about the UK to the EU. We've essentially got the same regulatory framework, which is the second Payment Services Directive. And I'll go through this list and explain a little bit about what's different about the way the UK has taken PSD2 and decided to implement it. So the first main difference is we have a single standard. Now, why is that a good thing? The good thing about a single standard is it enables a fintech to have one standard they can implement, and that will connect them to a large number of banks. They don't have to worry about connecting to different APIs at different banks. Yes, there is slightly different implementations, but the more you can harmonize this, the more you have a plug and play approach. There are other standards in the EU. There's a standard in France. There's a standard that is owned by an organization known as the Berlin Group, which started off in Germany, but is far greater than just Germany now in EU. And there are other standards. What we've done, however, in the UK is ensure not only that there is that single standard that the big banks must implement, we also, with those big banks, ensure they implement it well and consistently and conformantly. The regulatory framework is important. That is the European regulatory framework, as I've stated already, and that basically creates that bargain of regulated actors having the right to access certain information and initiate payments from regulated banks. So what's the difference between that and the trust framework? Well, in my mind, the trust framework is saying, well, how do I know if I'm a bank that organization that I'm sharing data with, 1, is regulated, and 2, is the organization they say they are, and 3, that the actual individual is the individual I expect them to be that's accessing that data. All of that together is what we call the trust framework. And I've talked about the regulatory framework, but how do you check the identity of that third party requiring the information? What we've done and what happens in the EU is the provision of qualified certificates. In the UK, we provide those certificates from the Open Banking Implementation Entity. What we also do is run a directory which checks the regulatory permission of all of those entities, so we can check not only that they are who they say they are, which is the certificate, but also that they're currently regulated as well. The big differences, however, and I've talked about the single standard, but the other big differences are implementation and delivery. We monitor and manage the implementation at a high degree of granularity. Now, in the EU, there's a regulatory framework, and it's down to the individual competent authority to decide precisely how they're going to ensure this is implemented effectively. But it tends to be a TPP will complain, and the regulator may decide to do something about it. In the UK, we are monitoring implementation on an ongoing basis of the big banks in the UK. If their performance standards are not good enough, we will take action. If their implementation is behind the dates that they subscribe to, we take action. We have a detailed roadmap dictating when each item of that implementation requirement should be delivered by each and every bank. So it's really important, I think, if you're going to have a successful ecosystem, you have a very clear plan for implementation and you're monitoring and supervising that implementation on a daily basis. And the final piece of the jigsaw is what we call ecosystem stewardship. And you'll hear me talking about ecosystem all the time. This great number of organizations, the 325 that I've been talking about, all those organizations are working with each other somehow to create the standard. That's collaboration, but also what happens to make sure that when there's a problem at one bank, that all the third parties know about it. When there's a different level of implementation, a very small different change that's being made by one bank, how do we make sure people know about that? And when a TPP is deciding to implement for the first time, how do we hold their hand and make sure they're implementing with a bank that isn't going through a change, hasn't got a change freeze, all those kind of things that might go on that might make life difficult. We're there to bring people together and help that implementation go smoothly. And we're dealing on a daily basis with all of the TPPs that are in our ecosystem. We run a sandbox to help them test their own propositions as well. So we're the glue really that holds all of this together. I've come off a workshop that we're running at the moment. We run workshops on probably a monthly basis, and we're bringing people together to understand what their issues are and make sure those issues get resolved. So ecosystem stewardship is part of what we've done in the UK that is not done necessarily in the EU. This is a fussy slide, and I won't spend a long time doing this, but this is just intended to show a little bit more detail of what's different in the regulatory framework between the UK and the EU. So what I've got in that middle block, in the green block, is what's in PSD2, which is the legislation that underpins open banking, and what we've done a bit differently in the UK. What I haven't talked about is premium APIs. And one of the interesting things I think about open banking is it's only a start. And I talked about 4 million users in the UK so far. Premium APIs unlock the potential of open finance and open banking beyond payment accounts. Now, the regulations that we have are all about payment accounts. The clue is in the name PSD2, Payment Services Directive 2. But of course, many fintechs want access to more information than PSD2 requires. They may want information about loan accounts or mortgage accounts, indeed, maybe pension accounts, investment accounts, and insurances. Premium APIs enable a bank or indeed another organization to take advantage of the fact they've created that API gateway so they can add more data into the mix and potentially commercialize their investment and do bespoke bilateral deals with individual TPPs for the provision of additional information. Now, we've just started our work on this. We've done a small piece of work at Open Banking in the UK, which we've called Extended Custom Attributes. And that's a standard that enables a bank to share additional information about the customer with a relying party. We've been very careful not to call this identity, but they are identity attributes. Things like age verification, things like address confirmation, all those things that have an obvious use case. And in many cases, the banks have that information to hand. They've got the authentication devices in the mobile phone already. So why not use that authentication to be able to authenticate to a relying party what the bank knows about that individual with that individual's consent? And one of the underlying basis of open banking in Europe and in the UK is that it has to have the underlying consent of the consumer. So just a little bit of information about the sort of organizations that are using open banking, the sort of propositions that we have in open banking in the UK. This is consumers. So we're providing things, personal financial management, that's the aggregation. That was probably the first thing that came about as a result of open banking in the UK. But it's extended now to include borrowing, finding ways to provide borrowing facilities to customers that may be underserved by the big banks, debt advice. So what you're seeing is instead of customers having to complete debt money management things themselves, they can simply download some of that data automatically. New ways to pay. You see, you've got a familiar name there, American Express, who is a payment initiation services provider in the UK. And other ways to encourage people to switch services. So two names there, Plum and Emma, what they're going to help customers with, and they're on the micro savings side too, is how do you encourage customers to save a little bit more every month? So lots of different types of apps for consumers and lots of different types of apps for SMEs. Indeed, many SMEs were already sharing data with their app, with their cloud accounting software. It's a great way to ensure that things are reconciled. And what we're doing with open banking is make that a little bit easier than the way it was done before. So that was probably the beginning of this. We're now seeing a lot more add-ons coming into play that can build on small businesses that were already quite familiar in many cases with using open banking anyway. And I just thought I'd finish before questions with a little bit of, well, what next? And I've talked about payments. I really think there is significant scope for improvement here. We've got very few numbers of customers, those 4 million, very small percentage are using open banking for payments today. And that's because it takes a bit of time to make sure that payments, that the APIs is sufficiently capable of being of performing well and being available before an organization will want to use it for payments. If you're comparing open banking with, say, the big card schemes, you need to ensure you've got a high level of availability. That's getting there, very close to having that at the level that we need it to be. That's enabling some of these use cases to come into market. I've talked about tax, utilities is next. The holy grail will be retail. There is clearly a use case here for retail in the UK and an alternative to card payments. Variable recurring payments, you may have seen some press about that in the UK. That enables people to make payments without actually being there and without actually having to authenticate each and every time. That will enable things like subscription payments. At the moment, that's a premium API, apart from for sweeping, which has been approved by our competition authority as a mandatory requirement for the big banks in the UK. And what that means is if you're sweeping from one account to another, for example, to top up savings, then that is a requirement of all the big banks to enable that to happen and enable providers to offer that to their customers. I've talked about premium APIs. I really think there's significant scope here. Once all the implementation of the regulatory requirements has been achieved, I really think many banks will look to find a way to benefit from their investment. But then I've also talked about open finance. How can we make this far more helpful for customers? They can see all of their finances in one place. And we call that open finance. And if you look at some of other countries' implementation of open banking, they started with open finance. In fact, many have started with the principle of a customer data right, but wrote back from that and said, well, what is the first implementation? Well, maybe banking is the first type of implementation, but the principle here is that customers should be able to share their data with whomever they choose. And that's what I mean when I talk about extending into other sectors. We call in the UK that smart data, and there's some work being done by the UK government on smart data. But I'm really keen to ensure that we build on what we've already achieved in open banking and find a way for customers to benefit from the data that others hold, which is their data, to see how they can get better deals from a wide variety of providers, not just those in financial services. So that's all I had to say. Hopefully that's helpful. If people want to get in touch with me directly, please do. We're happy to take questions.
Alan, thank you very much for your presentation. So open banking, is it a late phenomena or it has been there for some time?
Open banking in some way has been there for some time. In the old days, we'd have called it screen scraping, where people were sharing their credentials with a third party, or indeed it would be a bilateral arrangement between a provider and a bank, as was the case with a lot of the cloud accounting packages. So open banking in some shape or form has existed for a number of years. Open banking in this form, in terms of a standardized API framework and a regulatory framework that underpins it, only really kicked off with PSD2, which came out, I think, others will tell me if I've got this right, in 2016. It was implemented, had to be implemented beginning of 2018, January 2018. So in its current format, in terms of PSD2 regulatory format, it's been in existence for only 3.5 years.
But I see there's a lot of acceleration in the last 1.5, 2 years. Is that right?
That's right. Yeah. And I think what you find is that, there's a lot of money has gone into fintechs in the UK and in Europe. And so if you know that there's this thing coming, open banking, you then need to get funding for your proposition. You then need to test your proposition, and then you bring it to market. So we've got them in market now. I mentioned the 114 number. So there's always a bit of a delay before those propositions come to market and customers realize the benefits they can achieve from using those propositions.
Lastly, OBIE, do you all regulate even in the Middle East?
We're not a regulator, but the trustee of open banking has certain powers, which are delegated powers from our Competition and Markets Authority. So we were created as a response to retail banking competition in the UK, where it was felt that the big banks had too big a share of the retail banking market. And instead of doing what competition authorities in many places, and certainly in the UK, have done in the past, which is look at big organizations and seek to maybe break them up or find alternative remedies, this is quite a novel remedy by the CMA in the UK, which built on PSD2, but said, hey, we've got PSD2 coming. How can we build on that and really try to make this work? To provide competition at a layer above the bank layer, rather than competition directly with a Me Too product with a bank. So whilst we have in the UK a number of neobanks, a number of challenger banks, this is to provide competition to the underlying parts of the current account, competition with the payment product, competition with the surplus savings element of a current account, competition with the lending element of the current account. So rather than breaking up the banks, break up the current account and find a way to deliver competition at each element of that current account instead.
All right, Alan, thank you for your presentation and time. And we look forward to meeting you somewhere in this part of the world soon.
Lovely. Thank you very much.
Maybe the next World Cup.
Yeah, brilliant.
All right, sir. You have a nice day ahead. Thank you.
Thank you. Thank you.